Hey, this is Greg. Welcome to the channel. On this channel, we talk about the market and stocks, and I come out with specific stock recommendations. We also talk about Fed policy and the market in general, and all of those things that make you a better investor. Now, in this episode, we're going to talk about one of my favorite companies, and it's none other than Airbnb. Now, one of the things I want to talk about on this video is Airbnb came public a little over a year ago at the end of 2020. And at that time, right around the time that it went public, I did a video and I ended up recommending the stock. A lot of water's gone under the bridge since then, some good, some bad. And that's what we're going to talk about in this video. And specifically what we're going to talk about is, does Airbnb's business justify its current valuation, and are the prospects such that it warrants our investment in the stock today? Now, before we go any further, if you get some value out of this, please subscribe and like, and don't forget to hit the bell so you can get notified every time I come out with another video. Okay, now as I said on the original video, I have a lot of experience with Airbnb. Okay, not only have I looked at the stock, but I'm also an Airbnb host. I have a house in Vermont, a ski house, which I use Airbnb quite a bit. Each year, the weekends or the weeks that I'm not going to be there, I rent it out to skiers to come and enjoy the house. It's in a great location, right on the mountain, and there's a tremendous amount of demand for the house. I used to use a local real estate agent, and several years ago I switched to Airbnb, and I have to say I have been extremely happy with the company and extremely happy with the service. Not only am I a host, but also whenever we go skiing, like when we go out west or something like that, we almost always use Airbnb. In addition, anytime we go, to the shore, to Nantucket, or any place like that, we also, whenever possible, use Airbnb because it's so, effortless, and the service is so great, and I've never had any problems on either side, either the hosting side or using the platform as a user. So having said that, as I said, the stock came public about a year ago, and a lot of water has gone under the bridge, some good, some bad. And if you look at what the stock has done, it's gone all over the place. It's gone up dramatically, it's come way down, and it's gone way up. It's been extremely volatile. So the first thing I want to say is, investing in this company at this stage, because it's still in the very early stages of its development, is not for the faint of heart. Okay, so it's no secret that Airbnb got hit really hard in the pandemic, as did all travel and leisure stocks, okay? It really fits within sort of like this hybrid sort of hospitality niche. So to the extent that travel and leisure and lodging got hit, they got hit tremendously during the pandemic. But with that, they made a fantastic recovery, and a couple of very interesting things happened related to the pandemic that increased their business, which I'll talk about later in this video. But the first thing I want to do, as I do with many stocks, is let's talk about the risks and then also the benefits or the upside of owning this stock. First, let's talk about the risks. Now, I'm going to list these risks. They're not in any particular order of importance. I guess the first risk would be this platform is subject to any kind of a resurgence in the pandemic, okay, or any other pandemic that happens to surface, okay? Any situation where the economy is going to be impacted or the economy is going to slow down, that's going to put pressure on people traveling, and it's going to be putting pressure on anything having to do with hotels or traveling or staying in hotels, or in this case, staying at an Airbnb. And for that matter, a second risk would be any economic downturn, okay? And I want to point out that now we're at a period where, and we've talked about this many times on this channel, we're in a situation where we have very high inflation. The Fed is behind the curve and has been for about a year, has not reacted to what's been happening in the market, and as a result, they are very far behind in terms of what they need to be doing to combat this inflation. So in the near term, you may see the Fed cut back on its securities purchases, and in addition to that, you may see them raise interest rates, and all of that could slow down the economy, which of course would affect the business prospects, at least in the short term, of Airbnb. So that's another risk to look at. But the one that really bothers me with Airbnb, and the one that I really get stuck on, and tell me what you think in the comments below if you agree with this, and also if you're getting value out of this, please like, because it really helps out the channel. It's a no-cost way to really support the channel. Okay, so hit that like button. But the thing that really concerns me and really bothers me, both as an Airbnb host and as a potential investor, is political risk. Now, you may find that strange for me to say political risk, but let me explain exactly what I mean. Governments, and I'm involved in real estate away from Airbnb. I'm a commercial real estate investor. I finance real estate. So I'm very attuned to this particular issue. Governments have been, over the last 5 years, really exerting their power and their control over real estate owners in the form of infringing on property rights. Now, this is occurring mostly in blue states where city councils and also state governments have been gradually whittling away at people's property rights. Okay? This has taken the form of increase in rent control, putting various restrictions on properties, and most damaging, and I've seen this in several cities in the Northeast, is they're putting restrictions on short-term rentals. Now, to me, this is tantamount to infringing on property rights and almost the taking of a property's value by these intrusive governments. This is very disturbing. And one thing that you learn when you study real estate in America is that America as a country, and this was something that was always pivotal and always fundamental to America, was the degree to which people have property rights. Okay, take an example like the UK. If you own a piece of real estate in the UK, you don't own the land. The Crown owns the land. You only own the building. Okay? In this country, you own a piece of property, you own the building, you own the land, you own the mineral rights, you own the water rights, you own the air rights, you own the full complement of property rights, and that's what makes this country so great. So these local and state governments, in their insane effort to provide tenant rights and to respond to the real estate lobby, because let's face it, Airbnb takes away a lot of business from local real estate agents. They used to do all of the short-term rentals themselves. So you can imagine they're not just sitting around and watching Airbnb take all of their business. They're acting politically, and it's having an effect. And to be honest with you, it's a very big concern of mine. Now let's talk about the benefits, of which I think there are many. Okay? As I said in the beginning, this platform is amazing. I mean, it's amazing to deal with as a property owner. It's amazing to deal with as a user. I personally haven't had any problems with it, and it's going to continue to the extent that the economy continues to expand and the economy continues to do well. This platform is in a very good position to continue to grow and grow very rapidly. The second benefit is that along with economic growth, people are traveling more, people are using the service more, and in fact, they showed their first profit last quarter, which I'll talk about a little bit later in the video. Another benefit is a really strange, like kind of offshoot of the pandemic, is that people are generally working from home more. And what you're seeing is people mix trips, vacations with work vacations. And so, people are going to Jackson Hole or something like that, and they're spending maybe half their time working and half their time skiing. So you're seeing more of this, and this is a great benefit. This kind of flexibility is a great benefit for Airbnb. Okay, so what I want to do now is look at the stock. I want to see where the stock has gone. I want to show you where it's gone and where I think it could be going from here. Okay, so here we are. Here's Airbnb. It closed today around 171. And you can see from, let's go to the historic chart. You can see it's been quite a wild ride here. This is the year chart. Let's go back. Let's go back to when it came public. You can see down here. See the end of 2020. Look at this. It shot way the hell up, almost to 220. Just completely crashed down to, what are we at, 136. Bounced around, really dipped unbelievably, and then it made a ride upward, and then right around here it shot up again because it came out with, as I said, the positive earnings. Let's take a quick look at the earnings. Okay, you see in the third quarter of 2020, they did report earnings. Before that, it was losses. This is shortly after they went public. They lost over $10 million in the quarter. That is just enormous. They did make steady progress, and then look at this. Third quarter of this year, they made a profit, and you can see that that was 62% above what the consensus was. So that was an enormous earnings beat, and one that the company should be very, very proud of, coming from where they were a little over a year ago. Let's take a look at what the analysts are saying. The analysts have an average price target of $198. That's significantly up from where it is now. You can see the high estimate is 250, the middle is 200, and the low is down here below 150. Looks like 135. Okay, and the estimates have bounced all around, but you can see that there is some bullishness developing in the stock among the analysts. Okay, let's take a quick look at valuation. As we look at some of the key statistics here, we have 346 million shares outstanding, 56% institutional ownership, pretty big float. And let's look at some of these valuation metrics, okay? The price to sales ratio is 21 times, okay? Compared to all these overvalued, I call them bubble stocks, this is pretty damn good, okay? And price to cash flow at 32, the cash flow is not such a meaningful metric because the company doesn't have that much cash flow. But they have a healthy margin, but I'm really focused here on this number right here, which to me is, fairly reasonable for this kind of high growth stock. Okay, now let's take a quick look at the technicals, okay, before I make my recommendation. And for those of you who have seen my past videos, you know that I like to look at these technical measurements to decide when to go into and out of a stock, even though on this channel our orientation is long-term holder. I do like to look at these short-term technical metrics to understand where I'm at mathematically before I go into or sell a stock, okay? The first one here is the Bollinger Band. The first thing I'm going to do is change this from the 20-day moving average to the 50, because the 50 for me is a better measurement because I'm a long-term holder. The 20-day is better if you're just trading. So anyway, here we have the Bollinger Bands. This is 2 standard deviations below. This is 2 standard deviations above. When you get down below 2 standard deviations below the 50-day moving average, which is this line, that is a very severely sold off stock, and typically that would be a very good time to buy. You can see that we are below the 50-day moving average, but we're not extremely sold off given the past ranges that this stock has undergone. Let's take a look at some of the other measurements here. We have the slow stochastics, which is an oscillator index. Now, the slow stochastics was showing oversold when the price was around 168, 170, but right now it is not oversold. The relative strength index, again, a measurement of its relative strength to other stocks in its category. The momentum index here is showing a little bit oversold, but not excessively. And the money flow index here, the money flow index here is not showing oversold. Now, ideally, you want all 5 of these indexes or measurements to be aligned, but typically what I look at is if this is oversold and the slow stochastics are oversold, that shows a very oversold position, and generally I would want to go in at that point. Okay, so the question really is this a stock that you want to buy now? If you like the business, you are probably pretty interested in this stock for a long-term hold. I think it is a very, very good bet long-term. One very interesting statistic to keep in mind is Airbnb believes that their addressable market is $3.4 trillion, although what they call their accessible addressable market, which means the amount of the market that they realistically have a chance to address, is lower at 1.5 trillion. But that is an enormous upside potential and an enormous amount of opportunity for this company. Okay, so I like the company. It's a great company, great platform. I'm a user. I'm a believer on both sides of the equation. Absolutely fantastic invention. Great disruptor to the market. I think that the short and long-term prospects are great because I see the economy continuing to improve, and short of some unforeseen calamity, I think that their business prospects will continue to improve. I like the fact that they finally made money in Q3, $1.20 a share. That's pretty damn good. And if things continue to go the way they are, they should at least equal that or continue to grow that as time goes on. But the question really is, where do we go in on something like this, okay? Look, I think at $171 a share right now, if you are a long-term holder, you could definitely go into this stock now. And if you have a 3 to 5 year time frame, you're going to do very well, okay? There's no question in my mind, okay? I obviously could be wrong, but that's just what I think. Now, if you're one of these guys or gals that obsesses over daily market conditions, you might want to wait because there's all kinds of stuff going on right now, and the stock could go lower. It could go into that oversold condition. I would say if you want to wait, 150 a share, 160 a share, certainly probability-wise would be a great level to go in at. But I think you're splitting hairs. You're never going to get the absolute bottom, so forget it. And as I tell all of my subscribers all the time, and my own children, don't obsess over short-term daily movements because they literally mean nothing, okay? The stock market on a daily basis is just an emotional casino where people are just buying and selling, buying and selling, buying and selling with no rationality. They buy and sell, especially on these more development stage companies that buy and sell on the slightest whim, on the slightest bit of news. It means nothing. You have to look beyond all that and look several years out and see where you're going to be. All right? So anyway, I hope you found value out of this. If you found value, please subscribe and like and hit the bell so you can be on board for future presentations, which will be coming your way soon. And I appreciate you coming by. I appreciate you watching the channel. And at this point, it's very simply Greg out.